Good morning all. So I'm just going to talk you through my kind of weekly setup, how I kind of set up the charts for the week, what I'm looking for, where I'm looking for kind of certain pairs to go, and how I'm generally going to kind of get prepared for the week to come. So typically I won't trade on a Monday, simply because I don't like the way it moves. It's really important that you kind of find your own way of trading and what works for you and what doesn't work for you. And I've personally found that whenever I trade on a Monday, I typically have a losing day. For whatever reason that is, it doesn't really matter whether it's me trading wrong, whether it's the market's not moving right, it just doesn't work for me. That doesn't mean that it won't work for you in the way that you trade. As I said, it's really important for you to find your own kind of trading personality. So I use Mondays as a good day to kind of watch, see what the market's up to. I will sometimes hold a trade. The CADJPY trade that we broke down in the Discord this morning, that is one trade that I've held over the weekend, and I'll explain to you why I've done that. But for now, I'm just going to talk you through my main pairs that I'm looking at and what I'm looking for in each of them. Now, if you saw my Instagram reel yesterday, you would have seen that at the start of each week, I remove everything off the chart. So that means any drawings, any alerts, we're going to remove them as well. And any kind of color coding, anything that could give you a bias towards the way a pair is going to move or the direction it's going to move in, we're going to take that out completely. If you don't use this already, you can only get this on the paid for version of TradingView. But if you don't use this already, I'd highly recommend color coding trades. So if a trade is at break even, this goes to green. Just does a lot for my kind of my mental game. If I'm trading something and it's still at a potential risk of a loss, so it's not a break even yet, it'll be orange. If I'm waiting for a trade or I've got a limit order set, it'll be blue. And it's just a good way of kind of, I'm quite a visual learner myself, so it's a good way of kind of assessing really quickly what's going on in the marketplace. So first things first, I'm going to take my higher time frame, which for me is 4 hour. I'm going to draw out these basic zones. So from here to here, that's a nice zone that we're going to look at. I'm not going to spend too much time on any kind of zone drawing at the moment, because really we're just looking at a zone above and a zone below. That's all we need to see, because we can obviously, we'll move with the markets. So these two are my EURUSD zones. This does, to be fair, look like it could be quite a nice entry point for EURUSD, but there's a couple of reasons why I'm just a little bit tentative. First big thing for me is it's Monday and I don't like trading on Monday. I will keep an eye on it. I will mark that as a red trade, just so I can keep an eye on what's going on. But there's a couple of reasons I don't like it. If I zoom back out to the 4 hour, first reason is if you look at the DXY, okay, and again, we'll clear the DXY for you there. So if we look at the DXY, it doesn't look like it's ready to go anywhere until we reach here. Now, coming full circle, the reason why we'll typically hold a trade over the weekend is because Mondays I find will typically just trickle. So they'll just kind of meander, and they might do something like this, where they just kind of move up and down, up and down. Very rarely will you get a decent kind of long-standing reversal. But if we were to get a reversal, we wouldn't be looking for it from here. So my hesitation with EURUSD is that we're already in zone, and the DXY is miles away from its zone. Also, GU, again, let's just clear that. GU is also in its zone, okay, similar as you can see there. So if we draw that one on, okay, so we're in zone with GU, but I don't know if you've noticed, GU and EU generally will move quite well together. EU has made a new high, so here to here to here, okay, so we've got a new high there, whereas GU hasn't made the same move. And on a pair that's quite confident with each other, that's something that does make me a little nervous. If I just add in a comparison, that we should really have confluence between these pairs. And typically you will, you see they're very, very similarly moving. However, GU, whilst this making higher highs, GU is making lower lows. So that to me does make me just a little bit nervous. Again, there's no reason to rush into trades. Really, you know, we want to be taking trades when everything is looking pretty perfect. So I'll keep an eye on this. I'll also keep an eye on GU as well, just to see what happens with it there. If we zoom out a little bit, let's see what's going on. Yeah, there's not much going on with GU anyway. So I don't see anything straight away on either of them. EU, again, sorry, EA, Euro, Aussie, a bit of a strange one. People often ask me why I trade this pair, but it's one of my preferred trades. It does move really, really nicely. Again, we're just looking at this higher time frame zone here. Typically, you'll find the way the market moves is in what's called accumulation, manipulation, and distribution. So you'll often find Monday moves like this, and then you'll have kind of an opposing move in that direction, which is the manipulation, and then ultimately you have a long weekly move like this. And this is typically the way the market moves. And if you look at the reasons why, this is basically a candle formation. Look. So if you look at how markets move and how candles are formed, typically you have something like this. Let's just color code it for you. So imagine that's a wick, and then we've got another wick down here. What you'll typically find is the open of the candle here is where you get the accumulation, and this is kind of your Monday area here. And then your big weekly move, let's just get rid of that for the time being. Okay, your big weekly move is like here. And then what normally will happen is, let's just highlight all of this, get it in a better area for you. Okay, so imagine this is the candle here. Okay, you've got the open, then you have your wick up and your wick down, and then your big weekly move. And then often on a Friday, you might have some kind of profit taking, so the market comes back up to here. And that's ultimately what forms a candle. That's how a candle is formed. Okay, let me just move this out of the way. Right, sorry about that. So you'll typically have this kind of accumulation move here, which is the open of the candle. Then you have a manipulation move here, and then distribution. So this is normally Monday. This is normally kind of Tuesday, Wednesday time, and then this is the rest of the week. So for me, my preferred time to trade is between kind of Tuesday late and the end of the week, really. I'm happy to take anything after kind of lunchtime Tuesday, so New York open Tuesday. And this is how candles are formed. They open here. You normally have a manipulation move. And so imagine that's a weekly candle. That's what we're ultimately looking for. So this is why, personally, I don't think trading on a Monday is particularly great. For that reason, usually Monday is kind of continuations from before the weekend, and often just kind of setting up for the week. And then you've got to watch out for distribution moves as well. Manipulation moves where they're taking out kind of highs and raiding highs, and then ultimately setting up for the bigger move. So just going back to Euro Aussie, don't really see much until there. I will keep an eye on kind of the hourly time frames to see if we get something. But what I wouldn't be looking for on a Monday particularly, and look, you might get a decent move from there. You know, it might move well, but I'm not particularly fussed about that. I'm just going to sit on my hands and just wait for the market to kind of show me what it wants to do before I take any trades. And personally, I much prefer trading these higher time frame zones. You know, I've talked about a few times on my Instagram the kind of the swings of the marketplace and kind of premium and discount. Well, for me, this market here, you know, is not in premium and discount yet. I'm not fussed about that at all until we get into this area. So trading from here or trading from here, these are, you know, zones that you could use. You might get a reaction from them. Is it going to be a decent reaction? It's going to give you a big trade for the rest of the week? Probably not. And what I want to be waiting for is the bigger trades that are going to carry me for a few days, you know, the swing trades effectively. You're not going to get one of those on Euro Aussie until we get back into this zone. So I'll mark up that zone. I'll keep an eye on it. You know, my analysis might develop throughout the week, but for now, you know, that's the only zone that I'm looking at. I won't even set an alert on it because I'll kind of check it every single day. Do make sure, if you haven't done so already, you are registered and invited to my free Discord. There's a free link in my Instagram bio, so just go onto there, click on it. There's a few spots, I think 20 spots or so left. It's going to be capped at 50. So if you do want to get involved and watch how these trades develop, then please do come and join us over in there. Let's have a look at EURJPY. So, you know, we've got a similar story on quite a lot of these kind of euro-based pairs. We are in, you know, a relatively decent zone here. So again, I'll be keeping an eye on it. Market is red. move it up to kind of the top of my priorities. I'll move it into my kind of waiting for entry. So you can add these categories now into TradingView, where I think if you click, where is it? Yeah, you can add a section now. So you can add a section and you can rename those sections. You can put, I don't know, break a structure or whatever it may be. And you kind of categorize your trades, and it just helps keep everything tidy. Personally, I would say if you are trading more than kind of 4 or 5 pairs, and you're relatively inexperienced, you're going to struggle a little bit. A lot of top traders will only really trade kind of 1 or 2 pairs. So, you know, for the time being, if you are learning, I would cut your pairs down as much as you can, cut out as much noise as possible. So there's a few good zones here. As you can see on EURJPY, I'll just mark all of them out. I would expect this zone to be blown, to be fair. I would expect price just to kind of trickle through this and then probably set itself up down here somewhere. This would be the kind of the accumulation zone where it's kind of meandering, and then might have a false move here, which would be manipulation, and then the bigger move for the rest of the week up here. But, you know, who knows? We could have a push up here as well. Equally, we could do this. And that was the manipulation move, and then the big move for the week is that, which does make more sense in line with kind of higher time frame. Again, we could have a manipulation move up to here. I don't see these zones, again, if we use our rangefinder, I don't see these zones as particularly high probable at the moment. They're both in the middle of the zone. We are in an uptrend, so there is an argument to say that the zone could hold, because we've broken structures to the left. Here, multiple structures, look, we've broken. So we're clearly in an uptrend now. So we would be looking for buys ultimately. And this could therefore be a good area to buy. But for me to want to buy, certainly on a Monday, I want to see something big. I want to see something like this. Clear breaker structure, maybe even a second breaker structure. And then we take that move there. That's the sort of thing I'd be looking for. Until we've got that, I'm not really fussed. And I'm happy to sit and wait, because I've found over time that, you know, taking these trades on Monday will often get you stopped. And the problem is, as traders, what happens is we make these good decisions, like I'm not going to trade Mondays. We see a trade go really, really well on a Monday, and then we're like, right, I was wrong. I need to start trading on Monday. And then the problem is that it's just happened to be that one trade has worked out. And actually, your first, which was a more calculated judgment, your first call, which was not to trade on Mondays, was the correct one. But one trade goes well, and then you convince yourself that actually you were wrong. And I've done that a few times myself. You know, sometimes some of these things I've done quite recently. So it's worth just kind of taking a step back sometimes and understanding what's right and what's wrong, and then going from there. So gold looks like it's in a good position, to be fair. If I just clear out these charts from last week, if we look at the 4-hour, gold again is in this huge zone. That's the only one that is actually looking pretty good to me, because it's a massive zone. It's a really clear zone to be trading from. And the price action on the hourly is really, really good, which is why I've got this alert here to show me. Now, again, I'm still not going to trade this unless I get a clear setup. I'm not going to be looking at kind of 1-minute entries or 5-minute entries just at the moment. I want, on a Monday, I want a big breaker structure. So if we can break hourly structure and then come back into here, then absolutely we can look at that, okay? Because that is a huge move. Remember, breaks of structure on the lower time frames happen all the time. Breaks of structure on the higher time frames, they are a lot less common. So for them to be reliable, they need to be in the right times. They need to be at the right time of the day, whether that's London Open or New York Open. They need to be on the right days of the week, whether that's kind of late Tuesday or Wednesday onwards. It doesn't really matter. For now, if you're going to be trading early on in the week, you want a clearer sign. And the good thing about this is that if we do get this really good breaker structure on the hourly time frame, okay, we don't then have to rush. When we've got breaks of structure on an hourly time frame, the chance of it coming up here, tagging that and shooting back down is really, really low. So what we then do is we just drop down. So we drop down. You see what I mean about the price action here? The reason why I don't like it. See how choppy this is? This is really crap price action. This is the sort of move that you want. That's a breaker structure that we can rely on. And that to me tells me that actually we're still a buy bias, because we've had impulsive candles up and it's really choppy price action here. So I'd wait for an impulsive move before we get any kind of indication we're going to go south on this. And the beauty of that, let's say we do get this move back into here, what will happen is typically is you'll get a setup on the lower time frame, and that's why you don't need to rush. You'll get 3 pushes in, then a nice breakdown, and then a return to order. So, you don't have to rush when we're waiting for breaks of structure on higher time frames. You don't have to rush entries because they will give you setups. And if they don't give you a setup on the first one, let's say it does do what we think it won't, as in it tags that, comes back down, what's probably going to happen is it's probably going to give you another one here. At some point in this rundown, if it is a bigger move, you are going to get a better entry than just a tag. I don't ever think there's a reason to take a kind of an instant reversal where there's no confirmation of entry. There's a time and a place for it, and sometimes it will take them in rare scenarios, but more often than not, if you're just entering on a zone, you're going to get slapped and you're going to get taken out. So just be careful with those entries and wait for extra confirmation. The way I like to think now is that if I'm not 100% sure on the trade that I'm taking, as in all the confluences are in my favor, it's much safer just to sit and wait. And actually taking 10, 15 average trades per week, whilst it may be profitable, if you just sat on your hands and taken the 2 or 3 trades that were really profitable and had all the confluences and looked as clean as possible, you'd have actually made more money and a lot less stress. So it's just worth bearing that in mind. But definitely going to be keeping an eye on this. If we do get that break of structure, that's going to be a good area to trade from. Finally, we've got Bitcoin. So the only crypto I really trade because the spreads are much better on it. I've already cleared this and marked it up, as you can see. Not much happening on this right now. We're in this kind of real squeeze at the moment, which does indicate that we're going to have a breakdown. But as some of you probably know with Bitcoin, it's, who knows what's going to happen. We're right in the middle of this range. And really the main zone we want to be trading sells from will be up here. But getting up there is going to be a massive, massive move. So it's just a case of kind of waiting and seeing. I'm not in a rush to sell this. We're overextended, as you can see, but you'd be selling kind of in the middle of nowhere. Again, you're going to be waiting for, if you are to be selling this, you're going to be waiting for a big confirmation on the hourly or the 4 hourly, something like that. And then, well, where it goes, who knows? But, a double breaker structure. So you got one breaker structure there. Let me just draw it on for you. You got one breaker structure there, look. And then another breaker structure there. Okay, a double breaker structure would be an indication that you could sell this now, but you're selling in the middle of nowhere. It's not in a higher time frame demand zone. It's, in the middle of a massive, massive range. So what might be a safer trade is just waiting for one of these lower zones to be tagged and then taking a buy. CADJPY, I'm not going to go through too much detail now. I've put up some details in the Discord of why I've got this trade on and why I'm still holding it. So go over to the Discord and have a look at that. And I will do a full trade breakdown on this once this trade is finished, because it was a really clean setup. You can probably see, huge move there thanks to CPI. We've had some kind of corrective price structure in here. We had a lovely exchange of hands, and this is the sort of shape that you want to see when you're looking to sell from a zone. You want this kind of this arcing shape, this curve in the marketplace, which shows that buyers are weakening and sellers are coming in, and then you just wait for clear confirmation. So here we had a clear impulsive breaker structure with imbalances left behind, return to order. We'd already had a couple of kind of nicer moves down here. A lot of people will often sell early in these, so they'll wait for this first kind of 1, 2, 3 tags, then kind of a messy push down. But in my opinion, it wasn't quite ready yet. So waited for that second breaker structure, which we had here. Again, more push. Each time the market pushes into these zones, what we're doing is we're taking out more and more liquidity. Now, when we're taking out more and more liquidity and it's still failing to move, that shows that actually these are raids. These are just taking out further buyers. Sorry, they're taking out early sellers to set up for the bigger move, and that's ultimately what we had. And we held it over the weekend, and it turned out to be a really nice move with now a really kind of impulsive and proper breaker structure there. So, possibly, if we get the setup, possibly we could look for a re-entry from here. If we do get that, because that's a real clear downtrend, we might want to have a look at that. In fact, I'll move my zone there, but we'll see. Sorry, team, we got cut off there. So yeah, I'm going to set an alert here. Definitely, I'll have a look at it for a possible entry. Something I will consider because I'm already in the trade. But again, I would expect that we're not going to get any kind of big reversals here. I would expect, because it's a Monday, we're just going to get this nice, slow, meandering move all the way down to our target, and that should end up with a really nice kind of start to the week. So if that comes in, that will be 11 to 1. I've got half the position still on at the moment, so that will turn over for me 0.5%, which is great. I trade at 0.1% per entry because I'm working with prop challenges and prop firms, so it's just a safer way of making sure you don't hit those drawdown limits. And at the end of the day, if you're good at your trading and you're trading profitably consistently, you don't need to be trading at 1% per trade or 0.5% per trade. 0.1 for me is enough. If I can take 30R in a week, which is quite common now, that's 3% a week, and for me that's more than enough. Some weeks I'll do 50, 60R, over a few different trades, and again that will give me 5%, 6%. Over a month, that's 20% on the account, and that's more than enough that you need. If you think at scale, when you're trading, say, £1 million, 1% or 2% is 10 or 20 grand, and that sort of money will only ever grow, because then you'll get a £2 million account or a £4 million account, and before you know it, you can have investors throwing money at you to trade. So you don't need to trade huge. We all we all in the early days want to kind of trade these massive accounts and massive profits and massive R's. But I've learned that actually a consistent 3 or 4 R trade at 0.1% will slowly grow my bank. Takes a lot of pressure on the psychological game. I'm not playing with such big numbers. There's less pressure. I'm not worried about hitting my drawdown limits. And personally, I've found I've gone through all the motions of trading big and blowing accounts, and this way it's just a lot safer. So if you haven't done so already, check out on the Instagram. I've got a link in the bio now for the Discord. There's a few spaces left in that. Please do like, subscribe, and share and save this content. I really appreciate it. And if you whack on that notification bell, you will get notified when I upload my next video. Do head over to the Instagram, because I'm dropping educational content all the time, little kind of 1-minute reels with kind of tricks, hacks, and secrets that I use to make myself a consistently profitable trader. And catch up with you all soon. Cheers.